right, so let's look at an actual example with numbers. Dixie Corporation began the month with merchandise inventory of 65 units that cost a total of $48.75. Remember, we're using perpetual inventory for all of these, not periodic. Right, we talked about that a little bit in Chapter 5. Perpetual inventory system means it's constantly being updated. Every purchase, every sale, your inventory records get updated, which is a lot more commonplace today than a periodic system, which only gets updated periodically, like maybe once a month or something like that. Okay, we're using FIFO, and let's do this. All right, so January 1st, they told us we're starting off. Oh, let me redraw my little T account here. Purchases, right? You got merchandise inventory T account. You you have a beginning balance. You add any purchases. You subtract items that you sold, and you wind up with an ending balance. All right. And what we've got in this data table here is we've got units, right? And this is the cost per unit, all right? But sometimes it's a purchase, sometimes it's a sales price. So we'll get to that. We start off with 65 units. A total cost of $48.75. We can just divide those two and figure out what the unit cost is, which happens to be $75. So you've got 65 units. You know what? Let me step back for a second. We've got 3 columns in here. We've got our purchases column. We've got the ones that we're selling, cost of goods sold column, and we've got our ending inventory column, the inventory we have on hand. Remember, inventory is either one or two places. It's either going to be sold or we're going to have it still on our shelves. So this last set of columns here represents what we still have on hand at any time. So here we go. We're starting off January 1st. We've got 65 units at $75 each for a total of $48.75. Okay. And then January 5th comes along and we buy another 110 at $80 each. So we have 110 units at $80 each, which is a cost of $8,800. So now this is the important part. What has to happen here is now we're saying, see this line here? We're saying, okay, now we have 2 layers of inventory. We've got 65 at $75, and we've got 110 at $80. So the idea is on each date, you're going to say in total what you have. It's important to repeat the layers from above and bring them down to each date as you go along. Otherwise, you will lose them without question. All right, so now we have these 2 layers of inventory. We've got a $75 layer, we've got an $80 layer, and that's how they're referred to as inventory layers. All right, the 13th comes along. We're selling 125 of them at $108 each. Oops, oh, let me step back. I forgot, we're going to do journal entries in between. So we're going to kind of flip back and forth between the journal entries and the grid. All right, so we bought 110 at $80, and let's record that. We've got a debit to inventory. MI is merchandise inventory, right, because we're increasing inventory. And we owe the money, so we're going to credit accounts payable for $800. All right. Now let's go back. The 13th, we're going to sell 125 units at $108 each. That's really the sales price. We don't really, we care about that, but we don't care about that in this grid. All right. So these are revenues, right? This is sales revenue. That's what we're going to be recording for these guys. And what it is, they're selling 125 units at $108 each. We're going to record $13,500 of sales revenue when we get to the journal entry part. But that actually doesn't play into this grid because this grid is about the cost of the inventory to us. All right, if we sold 125 units, the question is which layer did we sell from? We're selling the oldest inventory first because it's FIFO. So we have 65 of the $75 ones, and we've got 110 of the $80 ones, but we're selling 125 units in total. Well, FIFO says first in, first out. The oldest ones go first. So of that 125 units, we're going to sell 65 of the $75 ones, and we still need another 60 because we're selling 125 of them. So what we're going to do is we're going to pull from this 110 layer, all right, this $80 layer. We're going to sell 60 of the $80 ones. Okay, so we've pulled 65 of the $75 ones off the shelf, and now we're pulling another 60 of $80 ones off the shelf. All right, so that's 125 units that we sold. So what are we left with? Well, we sold off this whole $75 layer. That's done. That's gone. And we sold 60 of this $80 layer. So that means we are left with, if you take 110 minus the 60, we're left with 50 at $80. And that's what we have on our shelves. Right? We either have it or we sold it. Okay, so the journal entry for that now, let's move on to that. We've got accounts receivable, because we're assuming we're not selling for cash. So if it was cash, it'd be a debit to cash. Accounts receivable, 13,500. Sales, it should really be sales revenue. I should have that in there. 13,500. Debit to cost of goods sold. Credit to merchandise inventory. Remember, it's a two-part entry whenever you sell inventory, right? You record the sales piece, the 13,500, and we record the cost of goods sold and the merchandise inventory. Remember, cost of goods sold is treated kind of like an expense in the sense that it's always a debit because it reduces stockholders' equity. So it's on the debit side. And merchandise inventory has to be reduced because we sold it. And that 9675 comes from those two together, the 4875 and the 4800 that are here. These are our cost of goods sold. All right, so we're going to buy another 135 at $90 each. 135 at 90 in our purchases column here. And now we've just given ourselves a second layer of inventory again. So we repeat. We also have $50 at $80 that's still sitting on the shelves. And we have another 135 at $90. Okay, so we may have 185 units right now, but we don't commingle the costs. So let's record the purchase there. We have the same idea. We've got debit our inventory, right? We're bringing it up. And we have the liability. We owe the money on the inventory, credit it, bring it down. Or, well, increasing the liability. 12,150. Okay, so let's go back to the next one. The sale. We're selling 140 at $112 each. Remember, that's the sales price. Okay, so the sales price is $15,680, and we'll use that for the journal entry, but it doesn't play into this grid because this grid is all about costs. All right, we sell a 140 of them. That's what we're going to focus on. So we're going to sell 140. Oops, somebody showing you answers here. We're selling 140. Well, FIFO says we're selling from the oldest layers first, so we're going to sell all 50 of these at $80 each. And that's not enough, right? So we need another 90 from this layer, the 90 at 90 of $8,100, right? 135, because you have to sell 140, so you took off all of these, and we need another 90 of these. So what we're left with is 45 at 90, right? 135 minus the 90 I sold is 4,050. All right, so to look at the sales entry, you've got the same kind of sales entry, debit accounts receivable 15,680, credit sales 15,680, debit cost of goods sold 12,1, credit merchandise inventory 12,1. All right, and that comes from the 4,000 plus the 8,100 from here. Okay, so now let's total these guys here. We're going to total everything. We had purchased 245 units at a cost of $20,950. And we sold 21,775 of them, and we're left with 45 at 4,050. Okay, so if you take a second here, right, I'm going to draw, which never goes well. Well, it's just not pretty. How about that? All right, turn my pen on. If you were to draw this, I should have had, there was my pen. I knew I had it. If you were to draw this, all right, doing this here. We've got a beginning balance of $48.75. We have purchases of $20,950. We have sales of $21,775. There we go. Which should leave us with an ending balance of $4,050. Feel free to check my math. Actually, I should check my own math, right? $48.75 plus $20,950 minus $21,775. $4,050 it is. Okay? All right. Just to kind of show you, it all kind of ties together. So the last piece, what if somebody asked you how much profit you made? Well, the gross profit, if you remember, sales minus cost of goods sold. So we take the total amount of sales that we had minus the cost of goods sold, and this is the cost of goods sold. This is the cost of all the products that I sold, $21,775. And that would give us gross profit of $74.05, and that would be my solution. Okay, so I'm going to pause this and we'll go on to the next one.